All right, so let's discuss how to identify or anticipate an impulse before it starts or after the confirmation at least. So we all know that we have to first understand what area price is in. So an impulse is much easier to identify it early when it's starting if price is in a range. For example, before the impulse that we're in, right, price was in a range and this was our range. This was our high and this was our low. All right, so let's actually put those highs and low on the market. All right, so we had a high over here, and then we had a low over here. All right, so that was our range before the breakout. Now we all understand that an impulse breakout is confirmed when price closes above or below the resistance or the support, and you can see that by this candle closing above. Yes, price did push lower and closed back in the range. However, the moment that price dips out and it actually closes, it didn't leave a wick, it actually closed above with a strong candle. That told us that price is now ready to move into that range. Now, if price had left a wick, like for example here or here, then yes, there would have been chances of price pushing back to the support of our range or even lower. However, price didn't. So what price did is it respected the nearest low before pushing higher. So price went to retest the nearest low before pushing higher. Now, if price had closed below the nearest low, then we definitely would have seen price reaching the bottom of our range. But because price respected the nearest low, that was your confirmation to enter. And you can see that by price creating a strong bearish candle as if it's about to go down. However, the next candle that was created was bullish. That was your first confirmation, because if price was bearish, then we should have seen price going lower, but price didn't, right? And then it created another bearish candle, right? So if price was bearish, we should have seen another bearish candle pushing lower, but price didn't. It closed with another bullish candle. Now, this is your final confirmation to say, hey, price does want to go higher instead of lower. So now you can start thinking of buying, because you definitely do have great to risk reward. As you can see, price has still been pushing. Now, this is one way that you could have anticipated an impulse move, a breakout. Look for a range and see which price is pushing. If price is creating higher lows, then price is trying to push higher. If price is creating lower lows, then you know price is trying to push lower. You just have to watch out how your candlestick breaks out and closes outside of those ranges, because we do have weak candlesticks that will close outside those ranges but reject. So you do have to understand your candlesticks.